Has your UK bank ever stopped you from sending your own money to a cryptocurrency exchange? Maybe they delayed the payment. Maybe they capped how much you could transfer. Maybe they froze the transaction and forced you to call their fraud department. Or perhaps they simply refused to process it altogether. Even though the exchange was legitimate, the account belonged to you and you fully understood exactly what you were doing. Well, Parliament now wants to know why. A UK parliamentary group has launched an inquiry into the banking challenges faced by cryptocurrency businesses and retail customers like me and you. And in my opinion, this investigation is long overdue because this conversation is no longer just about cryptocurrency. It's about something much bigger. How much control should your bank have over what you are allowed to do with your own money? Before we get into it, I want you to answer this question in the comments. Which UK bank do you use, and has it ever blocked, delayed or restricted one of your cryptocurrency payments? Do not just write yes or no. Tell us exactly what happened, because I think the experiences of ordinary UK customers need to become part of this conversation. And at some point, I'm going to make a bit of a hit list to see which are the worst banks for doing this. The Crypto and Digital Assets All-Party Parliamentary Group has launched an inquiry into the difficulties faced by cryptocurrency and digital asset businesses when attempting to access banking services in the United Kingdom. The group says it has consistently heard reports from businesses that struggle to open or maintain bank accounts, alongside concerns about restrictions being placed on cryptocurrency-related transactions. The inquiry is inviting written evidence from the banking, payments, fintech and cryptocurrency sectors up until the 31st of August. After reviewing the evidence, the group intends to publish a report containing its findings and recommendations to the UK government. On the surface, this might sound like a fairly dry industry investigation, but it is not. Because when cryptocurrency businesses cannot access basic banking facilities, they struggle to operate in the UK. And when banks restrict payments made by individual customers like me and you, ordinary people can be prevented from accessing an entire asset class. That affects innovation, competition, investment and customer freedom. There are really two sides to this investigation. The first concerns cryptocurrency businesses. Imagine trying to build a legitimate, regulated financial technology business in Britain, only to discover that the traditional banking system does not want to give you an account. You could have compliance procedures. You could conduct identity checks. You could follow anti-money laundering requirements. You could be attempting to cooperate with the regulators, but without reliable access to banking, the business may still be unable to receive payments, pay staff, or operate normally. That could result in perfectly legitimate companies deciding that the UK is simply not worth the trouble. They may move to another jurisdiction that gives them clearer rules and more reliable access to financial infrastructure. The second side concerns individual customers, and this is the part most people watching will probably recognise. Many UK cryptocurrency users have experienced payments being questioned, delayed, capped or blocked by their banks. Now, banks will argue that these restrictions are designed to protect customers from fraud. And to be fair, cryptocurrency fraud is real. Scams are real. People do lose money. Criminals do use fake investment platforms, impersonation scams, romance scams, and promises of impossible returns to convince victims to send money. Banks absolutely should intervene where there are clear signs that somebody is being manipulated or defrauded. But there is a very important difference between protecting somebody from an obvious scam and placing blanket restrictions on an entire category of legitimate transactions. This is where I believe the banking industry needs to answer some difficult questions. If I attempt to send some money to a suspicious account belonging to an unknown individual, I understand why my bank may want to question it. If an elderly or vulnerable customer suddenly tries to transfer their life savings to an unregulated offshore investment platform, intervention could prevent a tragedy. But what about an experienced crypto investor sending their own money to an established exchange? What about somebody who has used the same exchange for years? What about a customer who has completed every security check, confirmed the payment and clearly stated that they understand the risk? At what point does protection become control? Because banks do not normally prevent customers from spending thousands of pounds on holidays, luxury watches, cars or other depreciating purchases. They do not normally block somebody from placing a legal bet because they personally believe the odds are poor. They do not stop customers from buying shares in highly speculative companies. They may provide warnings, but in most cases, the financial decision belongs to the customer. Yet with cryptocurrency, some banks appear to have decided that they should determine not only whether the transaction is fraudulent, but whether the customer should be allowed to make it at all. That is a very different principle. A bank exists to safeguard and transfer its customers' money. It should not quietly become the owner of that money. I do not want this video to become a simplistic attack on every bank. Banks are under intense pressure to prevent financial crime. When customers are scammed, people often ask why the bank did not intervene. Banks may also face complaints, compensation claims, regulatory scrutiny, and reputational damage when fraudulent transfers are processed. So they are caught in a very difficult position. If they allow every payment, they may be accused of failing to protect customers. If they block too many payments, they may be accused of controlling customers. That tension is real, and I feel it all the time online. But that is exactly why we need transparent and consistent rules. At the moment, the experience can seem completely unpredictable. One bank may allow a payment to a particular exchange, another may refuse it. One customer may complete a transaction without any difficulty, and another customer, using the same bank and the same platform, may be blocked. Limits can change, policies can change, and reasons are not always clearly explained. Customers are left trying to work out which bank is crypto friendly based on social media comments and personal experience. That is not a serious long-term system for a country that repeatedly says it wants to support financial innovation. The UK cannot claim to support crypto while the UK banks are blocking it. And this is the contradiction at the centre of the story. The UK has spent years discussing its ambition to become a major centre for cryptocurrency, digital assets, and financial technology. The government and regulators are continuing to build a broader regulatory framework and cryptocurrency businesses. Regulation is coming, compliance expectations are increasing, and businesses are being told to meet higher standards. And that may be reasonable. But here is the problem. You cannot tell cryptocurrency businesses to become properly regulated or simultaneously allowing them to be denied the basic banking services required to operate. And you cannot tell consumers that they may legally own cryptocurrency while allowing their access to it to fully depend on the unofficial risk appetite of whichever bank happens to hold their money. You cannot call Britain the home for financial innovation if innovation companies are unable to obtain a bank account. A country cannot regulate an industry into legitimacy while its banking system continues treating that industry as illegitimate. There is another potential consequence that is rarely discussed. When mainstream banks block access to established cryptocurrency platforms, determined customers do not necessarily stop buying cryptocurrency. Instead, some may search for alternative routes. They may use smaller payment providers. They may transfer money between several accounts. They may use peer-to-peer services. They may turn to platforms that they know less about. In attempting to protect customers, overly broad restrictions could push some people towards methods that provide fewer protections and are harder to understand. That does not mean every payment should be approved automatically. It means restrictions should be proportionate, targeted, and based on evidence. Blocking access to some platforms does not eliminate the demand. It simply moves that demand somewhere else that's less visible to the bank. In my opinion, several principles should come out of this inquiry. First, banks should publish clear cryptocurrency payment policies. Customers should not have to discover the rules only after the transfer is rejected. Second, there should be a meaningful distinction between regulated or established cryptocurrency businesses and unknown high-risk recipients. Treating every cryptocurrency transaction as equally suspicious is lazy risk management. And third, customers should have a clear process through which they can confirm that they understand the risks and authorize a legitimate payment. Banks can show warnings, they can ask security questions, they can introduce a cooling off period for unusual transactions. But once an informed adult has confirmed a lawful payment, blocking it indefinitely should require a strong and specific reason. And fourth, businesses that meet the requirement regulatory and compliance standards should have a reasonable route to obtaining banking services here in the UK. That does not mean every bank must accept every business. Banks still need to assess risk, but an entire legitimate sector cannot operate if companies are rejected simply because the word crypto appears in their business model. And finally, Parliament and regulators need to decide where the line sits between fraud prevention and financial freedom. That line cannot be left entirely to private institutions without accountability. This inquiry will hear from banks, payment providers, fintech companies, and cryptocurrency businesses here in the UK. Those organisations will provide statistics, policies, and formal submissions. But there is another kind of evidence that matters. The experience of ordinary people. What explanation did your bank give you? Did it block the payment completely? Did it introduce daily or monthly limits? Did it freeze your account? Did somebody from the fraud department call you? Were you eventually allowed to make the transaction after answering the questions? And did the restriction prevent you from buying when you wanted to buy? And perhaps most importantly, did your bank treat you like a customer who needed information or like somebody who was incapable of making their own financial decisions? I want the comment section beneath this video to become a record of what is actually happening here in the UK. Write the name of your bank and explain your experience. Keep it factual. Do not share private account information for obvious reasons. Do not reveal transaction references, account numbers, or anything that could compromise your security. But tell us what happened. We may begin to start seeing patterns. We may discover which banks are applying reasonable safeguards and which ones appear to be using blanket restrictions. Banks have a responsibility to protect customers from fraud, but they also have a responsibility to respect their customers. Those two responsibilities should not be treated as opposites. A good banking system should be capable of identifying suspicious activity without automatically assuming that every cryptocurrency investor is being scammed. It should be capable of warning customers without removing their right to make lawful decisions. And it should be capable of managing risk without quietly locking an emerging industry out of the financial system. This parliamentary inquiry does not guarantee that anything will change. The group will collect evidence, publish its findings, and make recommendations to the government. What happens afterwards will depend on whether politicians, regulators, and the banks are prepared to act. But this is still an important moment here in the UK. For years, cryptocurrency users have been told that payment restrictions are simply part of banking policies. Now, those policies may finally face proper public scrutiny. So let me know. Has your UK bank ever blocked, delayed, or restricted a cryptocurrency payment? Name the bank, tell us exactly what happened in the comments, and answer this final question. Was your bank protecting you or controlling you? Subscribe to the channel for more UK cryptocurrency news and opinion without unnecessary technical jargon. And before you go, make sure you check out the UK Crypto Podcast, which I co-host alongside Paula Talks Crypto. We release a brand new episode every Friday at 7 PM UK time, covering the biggest stories, debates, developments affecting cryptocurrency investors here in the UK. You can find us on YouTube, TikTok, and Spotify. Go and search for the UK Crypto Podcast. Follow the show and join us every Friday evening at 7 PM. My name is Matt P, also known as Milkshake Matty, and I'll see you on the next one. And remember this, the strength of the wolf is in the pack.